Testing, testing. Okay, guys, sorry about that. My mic got disconnected, but I am back now, and yeah, let's just keep watching this. So, yeah, I don't know how that happened, but it did. Anyway, I'm back now. Let's keep watching.
Okay, and measuring gap is classic technical analysis. But every time I've ever looked at books and courses and educators, they never really taught how to utilize it. They can talk about it after the fact. They can see it in hindsight and show it to you in books and sell courses and things like that. But nobody I've ever seen be able to identify them real time and understand when they're going to stay open, when they're likely to be filled, those types of things. And especially with electronic markets like this or 24-hour markets, where we don't have gaps in the same sense that we did when we had open outcry. And I've talked about this a lot when I was doing Twitter Spaces, the little podcasts. That idea of gaps or inefficiencies in price where there actually is no trading at all, that's a real liquidity void. Things like this get called a liquidity void. And that's unfortunate because it's not a liquidity void. This is a buy side imbalance, sell side inefficiency. It's buy side imbalance.
Yeah, so my mic got disconnected. I don't know how that happened. Like, I literally have no idea, but you know what? I'm back, and let's keep watching.
Too aggressively one side to the buy side, and it's inefficiently delivered for sell side. So what is it? Buy side imbalance, sell side inefficiency, which makes it a BISI. I made these names up for that very reason. The algorithm creates these little areas here, and we want to see this type of thing stay open. Okay, other educators out there.
He's made up so many names.
Mr. Chris Laurie, he has a group of people, and he's always talked about these things as a liquidity void, and they tend to fill in. Sometimes they do, sometimes they don't. My logic tells you when they don't, and what you do with that information. Okay, I did not learn liquidity void from Mr. Chris Laurie. I just used that term when I was on Baby Pips. People that were familiar with him, they said, "Oh yeah, that's a liquidity void. Chris Laurie teaches it." I said, "Okay, well I'll just go with that." So it saves me the time of having to teach something about that particular thing. I'm just going to go into more detail about where they form and how to utilize them. But anyway, obviously we're in PhD level, technical science now here on this channel, and you're seeing a lot more precision, a lot more understanding, and reasons why things are the way they are. So we can hone in on opportunities that the algorithm will present to smart money. Who is smart money? People like me and you while you're learning. Once you understand these concepts, you'll be able to go out there without me talking about it, without me hand-holding. You'll be able to see it, you'll anticipate, you'll know exactly what the market's likely to do more times than not. That's all you need, that's your little edge. And you wait for specific times of the day, and you wait for all the signatures that you look for to justify your trade. And how do you know what they are? You're watching real-time data with me this year. So you're going to start seeing setups that form repetitively, and you'll be able to see them so many times, real time, whether you're there with me when it's being done or after the fact and you're watching the recordings. The recordings will be long because it's the entire session, unless I cut it short because something reached a target or whatever. But they can go up to 2 hours.
Yo, that's actually kind of nice. He's going to be doing full sessions at some point in this mentorship. That's cool.
And that's why I'm going to do 2 of them a week. And if I get a good move, it may just be 1 for that week. So I'm kind of like tossing that in there and preparing you for it. Oh, you're already pulling back. I have to manage my own personal life too. So my objective is for you to find 1 good setup a week. And 1 good setup, you can see there's a plethora of setups. I've already shown the equivalent of like 40,000 in just the last 5 trading days. So, and they're not little micro movements. They're not the 5 handles I'm teaching you to struck.
Because people think that he doesn't know what he's doing. And I don't know how to explain to people, but you don't just create a whole bunch of concepts that are really, really advanced and work really, really well and not know what you're doing. He's obviously lying about stuff, so.
Prize for it as a low-hanging fruit objective to grow into. If you get 5 handles consistently, you can find that. That's 20 ticks. If you can find that consistently, you'll have no trouble finding the setups like I'm showing here. You just got to find a place where they all nest together, which is a market maker buy model in this example here.
My boyfriend and I have been arguing because he won't pay for YouTube Premium. But it's okay because I've just downloaded AdBlock from Capital One Shopping.
What?
It blocks ad.
So the market continues up. I mentioned that this would be an area where the next draw liquidity, which is a rejection block. And then I mentioned I'd take 3 above here. I do. And then above here.
This is a nice rejection block because it's a giant wick. I'm pretty sure this is what he's referring to.
The market continues up. I mentioned that this would be an area where the next draw liquidity, which is a rejection block. And then I mentioned I'd take 3 above here.
Yeah, it's a giant rejection block. People who say it doesn't work are just not smart people and not made for these advanced stuff. Agreed. I mean, it's not that they're not smart. It's not necessarily they're not smart. It's they're not open-minded. They might be smart enough, but it's not enough just to be smart. You have to be open-minded. And most people do not have that, like, at all. So, Yeah, it's a combination of the two.
I do. And then about here, I took 3 more, and then I left 2 on, wanting to see it trade up into that daily volume balance, that shaded area up here. And I took 1 off when I felt it was not likely to go up there entirely. It almost stopped me out here. And finally, I looked at this as the last line in the sand. If it crosses that, I'm going to let it take my stop. And it gave up the ghost and couldn't stop me out. And ever since then, it hadn't done anything higher. Okay, then we have the FOMC noise. I say that facetiously. And then we break down. I'm not going to cover any of this here because it's not going to be pertinent to what we're trying to do, because you shouldn't be trading FOMC. Okay, it's like a non-farm payroll event. It's a carnival ride. Yes, I can, but because I can doesn't mean you should. Okay, so I'm trying to be a responsible mentor, not someone that's just trying to promise you you're going to know everything. Okay, I'm teaching you how to find one good setup per week that has a lot of probabilities and statistical edge behind it, and the logic, not just me. A lot of my detractors and people that don't like me, or a competitor, therefore, will come forward and say, I'm cherry picking. And I'm sorry if this is beyond the scope of what you can do and sell to your students or whatever. But I'm trying to be in my own lane here. I'm trying to educate all of you. You don't have to subscribe to what I'm teaching. You can think that everything I'm showing you here is all contrived. Okay, a figment of my own imagination. But the problem you're going to have is you're going to see it in the charts live, and I'm not leaning on any other logic. So
that's the funniest part about it.
How many of you
you can't deny everything he's teaching is happening in the charts.
Once you see months of it over and over and over again, you'll be convinced. Okay, I'm convinced that you will be convinced. Let's put it that way. So that's
the part where you have to actually be smart
and skinny of it. Now,
and not just because you can be open-minded, but if you're not smart, if you're not like, if you can't tell that it's happening, then I don't know.
All right, so
that's your own issue, I guess.
All the logic as to why I'm anticipating it. I'm going long. Here, you can see the actual orders. And don't be discouraged by the 2100. That's actually 2.1% risk. Okay, it's based on a $100,000 paper trading account. And some of you like to choke on the fact that it's paper trading. But if you can't appreciate the fact that the precision elements are there with real-time data, because you can't do anything like with market replay on TradingView, you can only trade or execute with live data. So live data is the only way you're going to be able to do it. So you can't be faking it. You can't game it like MT4 and fake it like frauds do. So buy sell liquidity. That's where my initial draw the market is. So this is the market maker buy model. And you can learn more about that in my Scout Sniper series, which is free on this YouTube channel as well. So there's the order block. I'm waiting for price to move away from that.
We broke structure. We got a sweep with this low. Broke structure.
Liquidity. So my
we tested this for value gap and discount.
Your eye should be
and now we expand up
to break even. Because if it goes back below after running the relative equal highs, where the buy side liquidity is written, that would not be a good thing. So I want to make sure I'm controlling risk. So I want to see this fair value gap, that pink area, act as support. Okay. So what specific level? The high of it. I want to see it expand above it. And as it's starting to go up, I'm watching how price is gravitating towards that rejection block. Okay, and I like the expansion that we're seeing here. And I'm not thinking that we're going to collapse and go the other direction based on all the things I've already outlined. And there is a daily volume imbalance that's already shaded on my chart. You can't see it yet, but I'll scroll the video down on the axis, on the price axis, and you'll start seeing it in a moment.
So I think he's saying we're going to back test this inversion for value gap.
To look to buy or pyramid.
What you doing, Zach?
I'm rehearsing for our T-Mobile home internet commercial. You gotta talk really fast.
T-Mobile home internet ranks #1 in customer satisfaction for home wireless internet.
Wow, you're good.
Get T-Mobile home internet, just $35 a month with our 5-year price guarantee.
The lips, the tip of the teeth, the tongue, the lips.
Hey, video creator. With Artlist, you'll get everything your videos need. And now,
we're gonna backtest this. We're probably gonna backtest this inversion for a value gap, and then expand up into the rejection block. I'm 23. I just barely turned 23, though.
Of this position as it drops back down into that fair value gap. When this candle closes, I'm anticipating a fair value gap to form. There you go. So now I have a gap there. So I like that gap being there above the shaded area.
This is so useful. Like, I can't believe I haven't thought to use inversion for value gaps getting retested. But it's actually so smart. Like, this is probably going to act as support, this inversion for value gap.
It's pink. So I don't believe that that's going to have to be traded back down through. So that pink area becomes an area of a balanced price range. That's not classic support resistance. That's not supply and demand. That's not Elliott wave. That's nothing harmonic. Okay, it's algorithmic.
I guess I'm kind of dumb. An inversion for value gap getting retested is literally just the BPR. I look younger? Oh, well, cool. Yeah, I'm 23.
And I understand that some of you feel that this is complicated. I've actually had some people already put comments in the videos and say, it's too complicated. I can't do this. Okay, I understand. But I'm not here teaching the people that's going to tap out. I'm here teaching the folks that are really wanting to learn how these markets book price. And it was complicated for me as well. So I'm basically stating that the algorithm is not going to reprice below that, and it's going to be attacking the liquidity at 11,050 buy side.
That's so interesting, guys. If we inverse a fair value gap and it creates a BPR, the algo will not allow price to drop under it. That's so crazy. Like, that is useful because you can trail your stop to below it. That is really useful, actually. So anytime we inverse a fair value gap and it creates a BPR, just understand that the market's not going to go below that anymore. What about the other fair value? What about the other fair value gap? Can't the price come back to them? Yeah, price isn't going to go below this BPR. So now that it's created the BPR, it's not going to go below it.
So that's basically above the buy side liquidity pool that's being highlighted in the upper left-hand corner. So I'm moving the stop up. I can trust that the stop will not be hit because the pink area is a protected.
That's so cool. I want to take a picture of that, actually. Where's my phone at? I'm going to add this to my notes. Oh, my phone's still dead. I'll just have to remember it.
The algorithm does not need to go back down there. And the reasons why is because it's already repriced and it's aggressively going to attack those buy stops above those equal highs.
Yeah, it's because it's seeking this liquidity up here.
So 11,050, that's where I'm anticipating the next draw on liquidity. But there are two targets before we get there. And I'll obviously mention them as we go. Now that right there is a classic bullfight. I don't want to get wrapped up in thinking it's going to break down, but it comes down into this little area in here, back into that fair value gap that I like. Okay, I like that gap that's not being shaded yet. I like that right there. So I'm telling you with this annotation that watch the support form here.
That's great. It's going to backtest this. My phone's alive. I'm going to take a picture of this.
Okay, and I want to pyramid more. So the 6th position contract long I have, and now I'm going to draw out that fair value gap here. I want to be in more of the position. I like the fact that we dug down into it 2 times. We went down into that blue shaded fair value gap twice. So I'm putting 2 in there, whereas I normally would have done like 3 or something to that effect. I just want to make sure I'm building more position, and I'm basically saying that naked charts are superior to indicator dribble. And unless you have a time-based chart, you're not going to see these elements. And watch how price shows how it wants to rally. You see people out there, they have range bars, or they have Heikenhashi or Renko bars. That stuff's nonsense. It's absolutely garbage. It's nothing behind that at all. The algorithms have no respect of any of that stuff. And without a time-based chart, you cannot see.
What I wrote down in my notes is after we create this inversion for value gap / BPR, we should not go below this. So you can trail your stop to below the BPR.
The volume imbalances, the BISI passivity, all these elements that the algorithm actually refers to. So when I coded these things in price action, I'm looking for price to return back to them with the logic that they will perform as they're coded. So if the repeating phenomenon is identified by you, you're going to see there's certain setups that are going to be very easy for you to trust. Not all of them are going to be setups that you're going to say, oh, I would definitely take a trade based on that, because I have lots of students and I'm expecting large ranges to just now come in. So in other words, I'm expecting price to begin to start moving higher. As long as we're not digging into that pink shaded area, they can dip down into it, but not by much, and I'll explain that as we go. So I'm looking for the beginning of green candles moving up. Notice also that we went from large green candles, and now we're in small little range candles. Okay, so the next expectation would be what? Big candles. So if we're bullish, we don't think that that pink area is going to go and break and allow price to go down, then the next series of big candles should be in what direction? Up. Okay, so when I'm annotating my chart, I'm typing out, large range candles are coming or big green candles are coming. I'm studying, and I just went in and bought more. So my position's at 10 contracts. I'm saying this is a final partial entry, but I want to illustrate further if the opportunity presents itself. So 10 contracts is about as much as I wanted to do with this position because it's a big position. Like I'm looking for like 600 ticks. And it's a pretty significant run in price. I've already highlighted the next buy stop or buy side liquidity right above that 11,000 18 and a quarter.
This is an ad about client acquisition for your marketing agency, coaching, consulting, or course selling business. And it will show you
Now right here, this is, again, the rejection block. So I'm anticipating price reaching up into that. So I'm building all the framework as you would do in your own analysis, or in hindsight, when you do your back testing, when you do all your charts, you want to be annotating them just like I'm doing here, looking at the logical levels. And I taught what the PD arrays are, and you learn more about them in the core content lessons. Now that's a classic bull flag, and retail traders may in fact want to try to go long in here. That right there would cause them to go long because it's a breakout, and they would put their stop loss right below the swing low, just to the left of my most recent partial entry long. And watch what the algorithm does here. It's designed to do this very thing here. When bull flags are correct, and it's anticipating a higher run in price, it will always likely do this very thing right here. Boom. Stops are engaged. So now I'm typing out that it will sharply reverse higher here, based on what I've just explained to you there.
We stop people
so
out.
So now retail traders don't trust that bull flag because they got stopped out. They will not re-enter. They'll be too fearful to get back in, and that's why it's coded that way. Now, again, while I don't have that pink range on
do you guys think the algorithm's actually coded? Or do you guys think that it's... I feel like... I don't know if I really believe it's coded. I feel like it's always going to be seeking to make the most panic as possible, and smart money's always going to be able to control price. But I don't think that it's coded. But I don't know. Maybe it is coded.
Just know that it can dip down just a little bit below that bottom of that highest blue rectangle. It can do that just by a little shallow little dip below that, and that's all that would be reasonable. And then higher prices would be delivered.
Actually, now that I think about it, it's probably coded. But that doesn't mean you have to only be bought to be able to be profitable. I'd say there is probably actually a code that's running, but that doesn't mean that you have to you can still be a human and be profitable. Exactly, that's what I'm thinking too. I think the market just seeks liquidity, and the whole coding thing kind of just seems like a little bit of an extreme version of reality. I'm sure you could code bots to seek liquidity, but at the end of the day, it is just buy-side and sell-side liquidity, right? So, I don't know. But, yeah, at the end of the day, I just think it's highs and lows in the market and ranges, and the market's going to seek to run through those, so
I'm watching price, I'm thinking to myself, okay.
So I'm sure you could code something to go target that, but at the end of the day, if the code's offside, it's going to lose.
While I do believe that range that was shaded in pink that I no longer have on the chart because I want to keep your attention on the very salient moments as price is being delivered, I'm thinking to myself, it might offer an institutional order flow entry drill. So it may need to go just a little bit lower, a couple ticks lower. I'm extending the array gap. And I'm just, again, reminding you that's where I'm thinking it's going to go. These are all done through TradingView live. There's none of this annotations after the fact. It's all happening real time. You can see one of the other signatures is why I don't like trading post New York session on Wednesday is because it's like this. Okay, it's not as precise. I usually get in on the low candles and get on the high candles, and it's just real muddy during this particular time of the month. And I'm anticipating a likelihood of institutional order flow. So if it trades down and just touches just below that line,
he's talking about if it taps this lower for value gap,
and trust the fact that it would not fall
it's going to aggressively expand off of it.
Okay, so that looks nice right there. You want to see that type of delivery. Again, find that in support and resistance. The classic support and resistance taught from John Murphy's book, Technical Analysis of the Financial Markets. It's not there, folks. It's not. And for people that trade bull flags, they're getting stopped out here. They're gone.
This is crazy. Is he really doing this live? That's crazy if he is.
And when a retail trader gets stopped out, it's not likely that they will re-enter. And got my finger on the trigger to buy one more in the event that it drops down and offers me an institutional refund entry gel. And all that is me dropping a long if it drops below that little trend line I have there. And I'm highlighting that big up close candle. If it dips down below that, I'm thinking that it's just one last little attempt to trick traders going short before it rips higher.
IOFED, let's go.
I'll take and add one more contract long.
Boom. Let's do it.
You can see that upper left-hand corner. I have my mouse sitting right over top of the buy button. But we're done. Now I'm drawing your attention on the level that was just outside the view of your viewership on this video.
This is Wix Studio, the platform for agencies and enterprises, built to meet any brief.
I'm not sure what color that is, to be honest with you. I want to say yellow, but it may not be yellow. So I don't know what that color is. But focus up there, and that's a good distance away. So we're not looking at little tiny micro scalps. And we're looking at the down close candle. It's to the left of where price is now. I like that as an order block. And I just put my limit order up there, just at the bottom of that daily volume imbalance. So I just extended it out for a bullish order block. Now, I was actually trying to anchor to the high of that candle.
I have never watched an ICT mentorship. How do you think I should start? So, I will say this. Most of ICT is rambling and a waste of your time. And he's going to waste your time. So, it's tough. I would say T-Trades is probably more resourceful for your time. Like, if you don't want to waste your time, watch T-Trades educational content. Also, my short form videos. I genuinely, everything that I learn, I try and put it in a short form video. So, like, I binge all of those because, yeah, I genuinely, like, it's literally just a minute. And then you can hopefully learn something valuable from that 1 minute. But as far as, like, actually watching his mentorship, I'd watch the 2022 No Rant mentorship. I think that's valuable. And it's tough because there's no way around his ranting. Like, you're going to have to watch his ranting no matter what. So, yeah, I think for the most part, like 2022, then there's the no rant version that Sir Trader made. I would watch that. And then try and find videos from T-Trades and, like, AM Trades and Sir Pickle and all these other people that have made, like, simplified versions of it. But then at the end of the day, like, if you want to just get into the raw content, there's kind of no way around just the ICT lectures. Like, I'm at the point where I'm just like, I just want to be able to get the raw, full thing. So I'm going to just sit myself through and watch the whole thing, because one, I just want to be able to say I did it, but two, you know, in case he does drop some random sauce in the middle of these 1 hour videos, I want to be able to pick up on that. So,
but because I'm, again, monitoring a 1 minute candle, I know the likelihood of it touching the open is there. That's fine, but I would have anchored it. If I had cared enough to do it, I would have put it right on the high, and you can see it would have hit it perfectly. This is beautiful delivery now, so I want to see it run up above that 10,987 level. My old eyes are failing me here. It's hard for me to focus in on even with my glasses. 30 years looking at charts, man. It really takes a toll.
That's crazy.
Between that and, like,
I haven't even been looking at charts 2 years. ICT's been already on the charts 30 years. It's crazy.
Sensitivity from a motorcycle accident in 2009. It's
wait, whoa. He just dropped some lore right there.
To do it, I would have put it right on the high, and you can see it would have hit it perfectly. This is beautiful delivery now, so I want to see it run up above that 10,987 level. My old eyes are failing me here. It's hard for me to focus in on even with my glasses. 30 years looking at charts, man. It really takes a toll. between that and late sensitivity from a motorcycle accident in 2009, it's...
Dude, he's just dropping lore about himself. It's crazy. I have to use the bathroom. Alright. Let's play this.
It's not fun. Alright, and watch that order block because it can always be reclaimed. Now, a reclaimed order block is where it acts as support, it runs away, and it comes back down and trades into it again.
Wait. That was valuable.
In 2009, it's...
Reclaimed order block is what? Wait. Okay, reclaimed order block. He's about to tell us.
Alright, and watch that order block because it can always be reclaimed. Now, a reclaimed order block is where it acts as support, it runs away, and it comes back down and trades into it again. It's completely normal.
It's the same as a reclaimed for value gap. Respects it once, runs away, and then respects it again. It's the same as a reclaimed for value gap. Yeah. Valuable.
It's not something that is abnormal. It's not something to be afraid of. Remember, the logic was that it will not go below that original shaded area that's no longer shaded now. But in your charts, you should have it in there. And this is going to be the number one complaint, that I don't have enough annotations in my chart when I'm doing a live session. I have to read price the way I'm used to reading it. And having annotations, number one, it takes the focus off of watching price when I'm annotating. So if I'm watching what I'm typing, I'm trying to spell it correctly, so that way I'm articulating the information correctly on a 1 and 5 minute chart. And the question is going to be, okay, well, if that's the issue, then why don't you just trade with a higher time frame chart? Well, you're all complaining that my videos are too long. So
yeah, I just learned what a reclaimed fair value gap is, like literally 3 hours ago. So I didn't even know, but it makes sense. Like, I've always known that reclaimed fair value gaps were a thing. I just didn't know that they were called that.
The complaint going to be when I have to do the entire thing in front of you for up to 2 hours. And I can speed the videos up, but it's not going to be the same learning experience. So it gets back to, who really wants to learn here? And the people that come in my comment sections or talk about me in other circles about how it's long-winded, I don't get to the point. The point is you want to learn how to make money. Okay, that's why you're trying to do this, whether you're learning it from me or someone else. You want to learn how to make money. This is not a hobby. It's not a game. Okay, it's not a video game. You're in here trying to make money and enough to sustain a secondary income and maybe even replace it. So I'm looking for a price to want to reach up into that rejection block, which is where I have annotated 2 contracts will come off above the rejection block. So I'm anticipating that it's going to spike up in there, and I'm going to get a little overzealous here and type out the very instructions that I'm selling 2 contracts.
This may be the last ad you ever see. Because with the free ad block extension from Capital...
So here I'm reinforcing the idea that it will drive above here
So,
and give it.
taking profit at a rejection block can be incredibly valuable. Definitely worth noting. Yeah, it's only a matter of time, bro. It's coming. It's coming.
Time, folks. I had a fellow reach out to me on an email and say, all this stuff is added after the fact. That's the reason why you speed up the videos. So here's what I'm doing. I'm typing it out so that you know that when it goes up there and I hit the arrow, when I hit the sell button that's toggled for 2 contracts and the arrow appears, you'll understand that wasn't something added after the fact. I'm showing you here because I know the videos get sped up and it's hard to see when things happen. So I wanted to put sold 2 contracts as stated I would. I was ahead of time. Now, because I did it, I'm thinking to myself, now I got to wait here longer because had I not typed out sold 2 contracts as stated I would, it would have already ran up there and allowed me to get it off. So I'm just internal dialogue. That's all I'm sharing with you here. And I make light of it and type that out to let you know. I had to type it out, which made it probably jinx it. I had to sit in this a little bit longer before it gives me an opportunity to sell 2 of the 10 contracts. So all this here is preamble to a nice run up into 2 more liquidity pools, the one I'm waiting for, and then that spike wick high at 11,018 and a quarter.
Yeah,
and again, this is set up a
profit
little
at
bit.
rejection
So
blocks is nice.
it's a sloppy day, and sloppy days are, they're very hard to work with, and I don't like to engage them. We'll be doing some of them where I anticipate this likely very thing happening, so that way you know what it feels like to be in there watching it. Don't turn them off. Okay, you want to know what this feels like and how to engage them. Okay, you all think, all these setups that I show, you're going to walk out there and do the same thing and know exactly how to do it because you watch some videos like ICT Netflix. That doesn't work. Okay, you have to be out here in the trenches doing this. And again, this is sped up still. It's literally a little bit more than halfway the speed. If you look at the second count in the lower right hand corner, it's ticking along. Okay, it's going more than about 50% of the normal speed. So it's going faster than you would be if we were watching it real time. So while this was a recording of real time, it's still long. It's still drawn out. Okay, and this is where you forge patience, and patience is required to do this profitably and with longevity. So there's no shortcuts. You have to watch price action just like this. Now I'm referring to how you shouldn't be thinking it's going to reverse, because it's not. It's going to pop higher and allow me to take 2 contracts off.
What'd you say?
And I want to delete that sold 2 contracts as stated I would, because it started irritating me because there's too many things on my chart and I don't trade like this. But for you to learn it, it's edifying for you to have it on the chart.
My
so
monitor turned off.
And I'm thinking to myself, this is a really drawn.
Okay, what? Why did my monitor turn off? Did I unplug it? What the heck? That is weird. Okay, why did it turn off? Oh, because it unplugged. That would make sense. Alright. Okay. It's back on.
On that process. A lot of time just for that small little range still must be delivered yet. And I apologize because I heard the first portion of this video when I was cropping the 2 segments together, and the acoustics of my new trading office is not that great. Okay, so the audio will improve as we go through the process of producing more content. I'm in a new home, in a new room, and I'm literally talking where my voice is bouncing off my trade desk and the monitors too. So there isn't a lot of muffling that would normally be done. So it's going to sound like a little annoying. They would say the audio sucks or get a new microphone. Or I have a very high and expensive microphone. unfortunately, the rooms, and sometimes I'm in my RV and my recordings.
Yeah, I know, right?
And the acoustics isn't favorable.
LOL.
So unfortunately, that's going to have an effect on the playback. So I don't use a dollar menu microphone.
I think the key with
Okay, so I put that shaded area in blue, that little thin one. That's a
this
measuring
whole
gap.
trade.
So
This key with this whole model is that once we break structure, every single fair value gap supports price until we hit buy side liquidity. So break of structure, fair value gap supports price, fair value gap supports price, fair value gap supports price, and we're running up to buy side. That's how these models work.
looking at it.
I mean, yeah. Anyway, I guess. Anyway, this is. For the most part, yeah, that's how these models work.
It might give me an institutional workflow, like just trade just into a little bit. You can see I'm getting trying to buy 2 if it gives it to me. But I prefer to leave it open. Okay, if it leaves it open, that's a measuring gap, and I can trust that we're going to go up 2.
What would you say to somebody that hasn't tried therapy before?
Just ask yourself if what you're doing in your life right now is working. If you have peace, if you have good relationships with loved ones, or if you have healthy boundaries, if you're able to put your head on your pillow at night and just fall asleep, if you've got control of your marriage or your parenting, if what you're doing is working, then maybe you don't need therapy. But for most of the people I talk to, they don't know what the next right move is. And so I would say go sit down with somebody.
Yeah, I mean, understanding that once the structure is broken, the fair value gaps are just going to hold all the way up. I mean, that's super valuable because we can go in on these lower time frames and we can take flow states off of these fair value gaps, like break of structure, whatever the aligned time frame is for this fair value gap, I can take a flow state off of that. Whatever the aligned time frame is for this fair value gap, I can take a flow state off of that. Whatever the aligned time frame is for this fair value gap, I can take a flow state off of that. And that's what he's not saying, probably because it'd be too much sauce for him to say all that stuff. But that's the reality of it, is every single time we respect these fair value gaps, we can take flow states off of them.
1,050, 11,060. I'm just being facetious. I had to pre-type the told you so, laugh out loud. Which, in my mind, I'm thinking this is the reason why I gotta wait for it, because I typed it out. Had I not typed it out, it would already went up here. There we go. So 2 contracts have been taken off as a partial. Stop is still where I have it. I'm waiting for it to expand more to the upside. And what I'm saying here, this is like a speed bump level. In other words, don't look at that as resistance. Don't look at. I see a lot of people.
There
was a fellow
take profit at the rejection.
Years ago, Jason Stapleton.
Right there.
Okay, and he used to do things like this, where above the candle's bodies, he would use that as resistance and sell short there. That's not what the algorithm sees, and we're looking for it to expand through this. And all it was is a small little area to stop, pause a little bit, and then it's going to expand further on the upside. So I'm just dimming out the comments that are no longer salient and recording where I did, in fact, do what I said I was expected to do and planned on throughout the trade management. So everything's being dimmed out. That's no longer salient, but you can still see them in the chart as the price is being booked. Okay, and what I'm going to be watching is how we run above that. Now I'm going to trim it down to 1 contract at a time, and I want to see it expand and make a big candle or a series of big candles going up. The first contract I'll press, I'm going to try to take 3 of them off above that next level of 11,018 and a quarter. But notice what I do. I don't go and click 3 at one time. I'm going to try to gravitate towards that 11,048 level. There's buy side liquidity. Now there's me taking one off there. I'm watching. I want to see the expansion. There's another one coming off. I want to see if I can get a little bit more movement on this candle. Knowing that it's going to go to 11,048, and there's the third one. Okay, so now I have 5 contracts still, and here is the 3 I just peeled off. So now I can begin to consider moving that stop loss up because I've taken 2 partials, and it's now below where I think that is a measuring gap. So there's no need for it to trade back down there. If it does, I want to
need to figure out what a measuring gap
locked in 37.95 on the balance of the trade, with the expectation that we're going to gravitate towards this area here, which I'm going to make more prominent. You can understand that I'm going to take 3 contracts above this level. So you know what I'm going to be doing before I do it. I have 5 contracts still, and I'm going to do the same thing I just did, okay, which is running down equity. That's the principle. That's what I named it. The principle is that when we dig into pools of liquidity, we don't just indiscriminate like you've seen me do in other examples. That's the easy way because I'm recording something and I'm busy. I'm doing other things. I was doing mentorship lessons, and I still wanted to share examples. What you're seeing here is exactly how I trade. I'm peeling them off as the candlesticks are forming and expanding more and more and more. I'm not just dumping all of the, I want to take 3 off. I'm not just doing, okay, let me just take 3 off immediately. I'm going to try to squeeze as much juice out as a lemon as I can. And sometimes it's really nice. And other times it doesn't allow me to get all of them off. It'll come back in reverse and I have to either exit the trade or maybe even retrace more and allows me to add more. I'm not wanting to add anything here, but reminding you all here as viewers that there's actual buy stops resting above those relative equal highs, and they're going to be targeted by the algorithm. And I'm reminding you all that 3 contracts will be peeled off the same way I just did it when we went above 11,018 and a quarter. So everything's going as planned. Again, using TradingView, real time. You can't do this with Market Replay. You can't fake this. It's all, I'm letting you see everything. You're seeing all the order numbers. Everything's popping up as you expected. So I'm taking off 1, 2 contracts, 1 more contract when we expand above the high. I'm going to see it make a big, bold move above the candle's high right there. See how it's doing that? Now I'm running down equity. Every time we make a new high, I'm
Dang,
killing
bro,
them.
how many times?
So now I have 2 contracts, and I want to see if we can get up into that volume imbalance, that shaded yellow, orangish area where I have typed out focus all the way up here, daily volume imbalance. Now think about where it's trading at right now. If I fail here, and it comes all the way down and takes my stop loss from this point here, I don't care.
I've been trying to configure this field for an hour, but this CRM sucks. Maybe it's time to stand up to these slow...
I don't care, because I've taken the lion's portion of the move. I've been very precise about where I've entered with logic. I've taken logical levels of partial profits along the way where smart money would engage, because this is where the liquidity is. So I'm going to be looking for a run up into this area here. And you've probably already seen the little small video I posted on Twitter earlier today when it was just done, moments after I completed the trade. And then this evening I shared it again on YouTube, because I know someone or some of you like to steal credit and put videos by me that I don't unfortunately put the watermarks on.
Man took 6 partials
and you try to claim that they're yours. I don't like that. It's disrespectful, and the trading community shouldn't allow those types of things. And to someone who doesn't know who I am, they might watch a video like this.
Yeah, this is the nice thing about trailing your stop when you get to this point is basically anything else that it goes up is completely free game. Like, it's literally free money. But then if it goes hit your stop, you're like, well, okay, so what? It's basically like my take profit, so.
On their channel, or sharing it on their Facebook, or their Twitter, or their Telegram, or something to that effect, or Instagram, heroes. And they'll think that, wow, you traded that, but they didn't. You're seeing me do it. So I mentioned here, I don't care if I get stopped out, and now I'm moving to stop up aggressively. So again, the point is I've already took the portion of the trade-off that would be, in my opinion, the bulk. And I wish I would have taken one off here in hindsight. Like, I wish I would have taken one because we had a higher high there. And I'm thinking I want to do it, but I'm like, nah, let me just show you that these orders are there. That's where I executed, so I'm flashing them on and off. It's not an imitation after the fact. This is real-time data being recorded right there, and the executions are as exactly as they are at the time the trade ends. Now I'm changing the ticks because I know I have people, again, they don't like the fact that I show the paper trade in dollar terms. They're like, oh, you're flexing. I'm not flexing. I don't care about the money because I can't spend that. But for those of you that like to see the ticks, here you go. We're not doing 40 tick trades. We're doing monster, several hundred tick trades. That's a championship level grade trader, not someone that's going in there nickel and dime dollar menu trader. Daily volume balance is my trade terms or final target. And unfortunately, as most of you already know, it's not a spoiler, I get stopped out.
So yeah, this is very powerful if you can really understand the 2022 model, and you can get this sniper entry right at this fair value gap after we break structure. You can hold it for this entire model, and this 2022 entry, even if, like, let's say you're wrong like 1 out of 3 or 2 out of 3 times, if 1 of the 3 times you're right, if you can catch a move from here to here, how many R is that? That's gotta be like 7 R. I mean, you're gonna be extremely profitable if you can catch these 2022 entries. I think all of this is incredibly valuable, and it's time I stop sleeping on it. So
I take one of the contracts off because I feel like it's failing.
Yeah, it's got to be like 10 RR for real. I mean, just one of these sweep breaker structure for value gap entries has got to be like 10 R.
Like right here is an opportunity. I should be taking one off, and I don't, because I really want to see it stop me out quickly or run up there and hit my limit order, and I'm done. I'm at my wit's end, to be honest with you, because I know I don't usually trade this late on FOMC and or non-farm payroll week. But to teach you why, and I know some of you are looking at this saying, man, what's wrong with this? I want to trade like this. I don't like trading like this because the moves I usually trade in are much cleaner. They're much more faster, running to my target. I don't have all this. I mean, think about it. This is a 1-minute chart, and these candles are, really lethargic. So I'm hoping at the time of this right here, it springs up there and snaps into that 11,075.50 level and allow me to get the limit order on the last 2 contracts. I'm noting that there's equal highs here, and I'm thinking to myself, if it can go above that, I'm going to collapse and just be done. But I'm thinking, if I do that, then it looks like I'm not trying to hold for my target, so I look like I'm a weak mentor. See, this is all the internal dialogue. So I'm thinking to myself, okay, I probably missed the opportunity, but if we run back up and rebalance this range,
he should have
so
taken profit.
If you come back up, I'm going to take one
profit.
That way, if it does stop me out, at least I didn't get stopped out on the full 2 contracts on the trailed stop loss. Trailed stop losses, this is how you manage positions. Okay, there's people out there that can't be profitable, haven't shown to be profitable, and are waffling on live streams with nonsense that come out of their face about why markets do this and do that. They'll say that trailing stop losses are nonsense and that you shouldn't be worrying about it. Well, if you're going to be taking down several hundred, 600, 500 type trades, and I took one contract off here to reduce the likelihood of the sting if I got stopped out on the full 2.
Imagine being able to build anything just by thinking about
just
it.
Taken one more
Base
off
44, a complete AI creation platform.
Remaining contracts. So now I don't really care whatsoever if it trades up to my limit or takes my stop, because I got 9 contracts in the bank, and proverbial bank, right? It's paper trade. So the other opportunity here I have, and I miss it too, is that relative equal high, that line I've drawn across them. If it trades above that, then I could collapse it there and be done. And that would again look like I can't hold my target.
Okay, but in all reality, though, what's the difference between this take profit, and this take profit? I mean, for me, I am just going to take all off at these equal highs. I don't really care about the 6 or 7 partials and whether or not it's going to give me $1 or $2 extra profit. I would just take all off at the high. I really don't think that it matters as much. I don't know. I kind of think this is all arbitrary, whether he goes for these highs or whether he takes off here. He took our lifetime profits in those trades. Yeah, for real. But like I said, this is already 7R. This is 10R. This is generational wealth. Who cares if you take profit at this high or this high or this high? It's like, come on, bro. I don't know what he's doing.
My target, because where it's at right now, I could care less. It's a beautiful run, and you got to protect it. You have to have an understanding of how to trail
stop loss. If I was him, I would just get out here.
No real context as to where they should place a stop loss or trail it. They'll just put a stop loss on the chart, move it around, and you ever seen them show you examples where they have a stop loss and then they open the stop up wider while the trade's on?
At this point, the market...
I don't do that.
The model is complete, right? At this point, the model's complete. We've hit the equal highs. What is the point in hold? I guess he's saying the daily volume balance is his final target. So that he's basically saying the model should end at the daily volume imbalance. But to be honest, I really do think that, as far as understanding this as a market maker model, hitting these equal highs is a pretty good final target. Sure, the daily volume balance could get hit, but who cares? From here to here, hitting these equal highs is incredible. You should be very happy hitting these equal highs with a 10R and just be content. I don't get why he's trying to hold for this last little beat, but even if this daily volume balance is his final target, I don't get the point of why he's still holding, but you know what?
That's somebody that's communicating. They have no idea what price is going to do. They have no idea how to trade, and they're gambling. And they're just hoping it's going to move in their favor, and when it wiggles a little bit, they don't know how far it's going to retrace. See, that's the benefit of knowing someone that's been doing it for 30 years. I know how these markets look, clearly. And it's not to brag. I'm not bragging. I'm trying to show you by contrast, without really belittling anybody in particular. But you probably have seen many people across the years or months or weeks of YouTube and other social media. How many have you ever seen manage their trades like this and show you that they can do it? Showing you a trade log of history of trades is not proof. That's not proof. Anybody can do that. Anybody can create something like that. But when you get in there, whether it's paper trading, whether it's a demo or live, if they can execute with the logic that they supposedly understand and teach and manage the positions, and it goes to targets.
Well, he's not doing it very well. He's about to get stopped out.
And I'm using a medium that I can't fake. Not that it's in my character to do that, but trading view, doing this, you can't fake this. This is real. And I'm saying here, you witness me trading my market maker buy model. And again, you can find out more information about that on my
unless he doesn't
series in my YouTube channel.
If he doesn't get stopped out, that's incredible.
I don't recall how many videos are in that series, but that's the series I introduced order block theory initially. And if I'm not mistaken, I do believe that's also the teaching series that I did bring in the market maker buy and sell model. So it came real close to my stop loss. On Forex, that would have stopped me out. That's the difference in the markets. These are a lot more forgiving and more precise than Forex, and I have no interest in returning back to Forex in my own trading. So
That's
I don't have. I mean, I'll do analysis for you all this year, but I'm not personally going to be trading Forex anymore. And you're probably wondering why? Why are you doing that? With the central bank digital currencies that are going to come online this year, that's going to have a major impact on crypto and also Forex. And it may create huge risk. So I'm not opening myself up to that. I'd rather be in
really
market
that
activity
big
phone,
of
which
an
is
impact?
this market right here.
Maybe.
In the early 90s, I was a
I have
bond
no idea
and
about
S&P
that kind
trader.
of stuff.
So many of the people that are pretending to be educators today, or quote unquote profitable traders, they were in elementary school or not even born when I was trading S&P.
That's
now,
so
right here,
funny.
I have the opportunity to peel that last one off and be done with it when it runs just above that relative equal high. A little trend line that I don't extend over, but that was my little chance to do it. I'm looking at that as the last line of defense. It needs to run
That
here
makes sense.
and go on
That
my
makes
target.
total sense,
or if it
bro.
runs above that relative equal high to the left and fails, then I'm done, which is in fact what you'll see happen. But you want to get your position.
Do you know what's really fun? Making a website on Wix.
Hey, we're How Ridiculous. 3 childhood
Funded. That means take partials
almost
along
done
the way,
with this.
and then move your stop to a point
And
of
then
there's no real consequence.
we'll
to
probably
doing
watch-
stuff. I don't
I'll
care.
watch
I have
this
no
2-minute
emotional
one, and then I'll
commitment
be
to
done.
the results at this point now. If it now right there, that right there should have been me peeling off. And if it was a funded, real, live traded account, I would have done that because I've been impatient because we're looking at the time going into noon, and that lunch hour is usually when we have a retracement, and you'll see that occur here. And take my stop. But having your trade managed with a trailing stop loss, knowing where to place your stop loss, and here's my stop. And the saying, it was a nice trade, over 500 ticks for those who like to count that kind of stat. Okay, and now you're going to see it in real, close
It's
to real time.
1:11
I'm showing
a.m.
executions again, so that way nothing's changed. Everything as I was flashing them earlier during the live portion.
What time is it for
Price
you?
booking, and managing the trade. Everything here showing you from the lowest point. All this is exactly how you would see it on TradingView if you did it yourself. No trickery, no fraud, no making up, no MT4, rented MT4 servers. I don't do those things. Okay, people that can't trade like me or that precise, they like to make up all kinds of nonsense and stories to justify
Look
why
how
some
many
people
take
feel like they
profits
come
he's
against me
had.
with hate or
That's
cancel
so funny.
ICT. Well, if I'm going to do what I'm doing here and what I've done already for the community, which in my opinion is more than anybody else, I could be making millions of dollars teaching, and I'm choosing not to do that. And
No
I'm going
way.
to invest my time in all of you.
Right in the morning.
Take advantage of it, because I'm not going to be doing it again.
That's
So many people
funny.
ask me to talk about real-time data, show it live, do this, call this. I'm going to do it for the entire year, and there's still going to be people doubting. So for an FOMC day, I call this satisfactory. All right,
Did
so
he
in
get
summary,
stopped out? He got
I
stopped
promised to
out.
show you in relationship to the US 100 CFD non-US trader, like you're using MT4 broker type thing, and you can't trade the futures contract in the US. Okay, I'll show you the relationship of how it performed. It actually did better than the actual futures contract did.
Medbach, you're insane. I don't know.
But,
I'm
this
impressed you've been watching this whole
was a
time.
victory.
It's impressive. It's not easy.
There
It's
is the
boring.
account history. So from 100 all the way up to finally at $121,185. So 21.1% return, one trade. And there's the business. So you can see it's all real.
That's a
All
nice
executions
trade.
Done just like you saw me recording. Okay? And because I know TradingView follows me on Twitter, and because I know that they may have a way to monitor my trades and track them, I don't like that kind of stuff. You may think that's schizophrenic. You may look at it as other reasons why. Oh, you're trying to hide this, you're trying to hide that. I will.
But like,
I will show you how to build
the
up an
key
account
is
in
if you can just know the general market maker model and you know the 2022 fair value gap entry, you're gonna bank.
Okay.
That's the key.
I don't need to do it like this. Like this is me doing
Yes, we do. Yes, we do, bro. Yes, we do.
championship level type trading. So that's not promised to you, but I will show you how to build an account up. So kind of like a funded account, how to pass a funded account, and then how to manage it once you do it properly, and not try to shoot for the stars with these types of results, because this is championship level trading. Like if you're in a competition, you're trying to show the inferior competition that they can't even be in the same vicinity or arena as you. This is what you do. Okay, and this is the part that irks people. Okay, I always do this, and I've always done that with my MT4 demo accounts too. And it drives people nuts. Like it drives people nuts, and I don't care because I know the more people that know about me, the more likely they are to be able to look into what it is I'm doing. And I would hate to have someone attached to some kind of trade copy. I can't stand the idea of that actually happening.
Wait a second. Wait. What is he saying? Wait. Is this... No.
This may be the last ad you ever see. Because with the free ad block extension from Capital One Shopping...
This might be why. This might be the entire reason why he just lies all the time about him being or why he pretends that he's unprofitable. Wait a second. This is crazy. I'm going to record this.
Vicinity or arenas you, this is what you do. Okay, and this is the part that irks people. Okay, I always do this, and I've always done that with my MT4 demo accounts too. And it drives people nuts. Like, it drives people nuts. And I don't care, because I know the more people that know about me, the more likely they are to be able to look into what it is I'm doing. And I would hate to have someone attached to some kind of trade copy. I can't stand the idea of that actually happening. So that's why I do it. I'll do examples like this, show my son or show all of you, and then I'll go in and I'll do a bunch of nonsense trades. Okay, and then delete the account. And I've done it since I've been on TradingView. And the few times I did it in private, showing my private mentorship group, they watched me run up an account there too. And it's just a matter of not wanting to be tracked, basically. That's it. I mean, to me, it's not important, because I'm not selling signals. I can clearly do this. Okay, I can do it whenever I want to do it. And it's not imperative that I...
And that, right there, is the reason that he doesn't give a crap about the Robins. That's the reason he doesn't care if anyone watches his videos. It's the reason he doesn't need to prove it to anyone. He's literally explaining it in real time exactly why he does everything he does. It's just like, I don't know how other people don't see it, but I clearly see it. So
trade in an account. I don't need to do that. Okay, you might think I'm obligated to do that. I'm not. I'm going to challenge you to look at the things I'm showing you here and all the other examples that I make public, and see if it's not the logic that I've actually taught you in the tutorials and all the lectures, because it's the exact logic. It's not something else. It's not a twisting and contortion of things that make it feel like it's like that, but it's really not. It's absolutely right out of the lectures, exactly as I taught it, because it's the algorithm. It is the algorithm. So let's take a look at, in closing, the US 100. Okay, I'm going to use this one here. Okay, I've used both of these interchangeably, but for this one here, because I already have my notes on it, I'll use that. And you can see that everything being equal, there is the 1 minute imbalance. Not exactly, as I mentioned before, it doesn't book exactly like the futures market, but it's real close to it. And it trades down into it here, rallies up, and we magnify it. Sure, here. Here's that fair value gap after swing high, so there's your shift in market structure there. Comes down, hits the top of the 1 minute imbalance, and inside of the fair value gap on the 1 minute chart here. So it should stop. It should not completely close that in. Rallies. Here's your imbalance here. It should not completely close it in. Leave it open. It does. Trades into it a little bit, but leaves it open as you would expect. It rallies. Rejection block, partial, right there. This wick high, partial there. Relative equal highs taken, yes, and then into the daily volume imbalance. Okay, so look at the respect of it here. See that? Where's that coming from? Right. There's nothing over here. That's the daily volume imbalance. That's the algorithm. Okay, so same market.
That's crazy.
In the US 100 for non-managed
That's so valuable.
Feel like, oh, you're not doing for it.
Fair value gap, inverse fair value gap retest, rejection block take profit, top of this high take profit, equal highs take profit, daily volume balance.
We'll say it that way.
Take profit. And that's a wrap, folks. That's that's a fire trade. Man, that's so cool. Alright, we have, so really only like 4 minutes, because I'm watching this on 1.5 speed, and then I'm going to watch this 2 minute one, and then I'm going to be done.
Okay, it's not going to be perfect, identical, but it's going to be enough for you to be able to trade. And if you can look at this and see what I'm showing you, isn't this close enough? Like, if you don't have the opportunity to trade the US futures market, isn't this good enough to study? So that's all I'm asking you to do. Pour yourself into it and look for these types of moves, and you'll find them. Now, this is not model 2022 mentorship. Okay, this is me teaching you an actual execution based on real market making. It's not Wyckoff. It's not anything except for what I taught in my core content lessons and my sniper series. So this is actually me entering on the low risk buy. See, this is smart money reversal. Let me walk you through real quick. Original consolidation, we leave the consolidation, come back up in consolidation, distribution, redistribution, smart money reversal, low risk buy, reaccumulation, reaccumulation. Back to the original consolidation where buy side liquidity is. There you go.
This might be my greatest creation ever made. It's called the Terminator
crazy.
Cold Loom System, and it's one of the 50.
That's the market maker buy model. Okay. Everything I use to go long in the NASDAQ futures is what I taught with these models. This is an entire model. You could be a buyer in here, and that could be your entire run right there and you're done. Or you could wait for this move here, buy it, and then wait for it to get to the relative equal highs and not trade down here. That's fine. Or you can buy here, add here.
Hey,
add
bro,
here,
after you
and
pay for futures like
So it doesn't
TopStep
matter
or
what
Apex, do you pay any additional costs during the evaluation for data? Or is it included? No, it's included. I mean, for Apex, for sure it's included. I don't know about TopStep, but I assume that it's included for TopStep too. But yeah, it's included. At least I'm pretty sure that it is. But
sense to you. If it doesn't make sense for you to take the entries I use, that's fine. Don't feel like you have to be able to see every entry and understand why I'm doing it. You're going to find over the course of this year, there's going to be patterns and setups that I refer to that you already see coming. And when you hear me talk about it, you're going to be smiling and grinning, much like you are right now, because some of you already know what this feels like. You're seeing your model, your setup, your choice setup, that unique thing that's going to make you the consistent trader that you're aspiring to be. And don't let anybody, me included, drive you into one particular approach to entry or time frame or market. Everything that I'm teaching you here works in Forex, any pair. It works in stocks. It
yeah,
works
everyone
in
always
commodities. It works
asks,
in bonds.
like, does ICT concepts work in Forex? Bro, it's liquidity. It's every single asset on the planet. It's liquidity. This is how all markets move. I just think it's funny. Like, people are like really like wondering if inverse value gaps work on Forex and gold, and I'm like, bro, inverse value gaps work on everything. Every asset moves based off of liquidity. You can't change how the markets move. This is just how they move. They all do the same thing.
It works in, obviously, index futures. Okay, so I'm not going to co-sign crypto because I don't trade crypto. I have no experience with it except for trading a demo, and that doesn't mean anything. Okay, I have traded these markets, U.S. futures, S&P. I traded S&P, back in 1993. That was the earliest trade I took in that market, and I traded bonds in 1993. So again, most of your guys out there you're learning from, or try to learn from, or pretend to be teachers, they weren't even born yet. And the other ones that are older, that are trying to teach today, they were in elementary school when I was trading these markets. So there's a lot of older traders than me. I'm just saying that by far and large, the most talking heads today that try to be educators, they haven't been around long enough to know what it is. They haven't seen market crashes. They haven't seen bubbles, except for the crypto bubble. Who cares about that? The necessary scars and trauma that comes from doing it for a long time. They don't have that.
And I think the important part about this fair value gap is, like, we consolidate quite a bit before we get this manipulation, break of structure, fair value gap. And I feel like those are going to be the highest probability ones once you've had quite a bit of chopping around and then you get a sweep, break of structure, for value gap. Because this is all going to be liquidity that's going to buy back up here. So you want to wait for it to chop around quite a bit and then sweep, break of structure for value gap, and then we expand.
Going through it and seeing the ugly side of all this stuff and claw their way through it. And that's what I'm trying to present to you here, just with 3 decades of it. And if the Lord gives me time to do 4 decades, then great. But that 4th decade will be in private because I'm just trying to pour myself out publicly here for the last time. And it's up to you to seize upon that opportunity and make the best of it, because once it's gone, this 50-year-old dude that's been talking to you, he's done. I'm going to be doing other things in my life that will bring me and my family enjoyment. Not that I won't miss doing this, because I will, but I won't be doing it at the pace that you're used to seeing. So hopefully you found this one insightful. I know it was very long, but this is about what the live session is going to feel like. So if you got into this thinking that trading is like those little vignette videos where it only takes 2 minutes to get money, you're going to be in for a rude awakening, because it's a lot of waiting. A lot of waiting and weighing and deciding and second guessing and all that stuff normal. So get ready for it, because whether you're here live when it's happening or watching it in the recording, it's going to be very, very long. And that's just the way it is. Until next time.
Real.
Be safe.
All right, really quickly, I'm gonna watch this 2-minute one, and then I'm gonna be done.
Hey, business owner, tired of wasting hours on scheduling, attendance, and payroll? Connect Team's here to...
Dude, I'm so glad, bro. That actually means so much to me. I genuinely appreciate that so much. I'm glad I'm helping someone. At least, you know, like...
simplify all of that for...
The videos, the short form videos I make, bro, like... I'd kill to have someone have those for me. That's why I made them. That's the whole entire point of why I made all those short form videos, is because no one explained crap to me. No one told me anything about how these markets move. I had to figure it out and go look for it and search for it. And so once I figured it out, I'm like, you know what would be nice is if I made a video for someone else who could just watch it and it was less than a minute long. So I'm glad someone's able to appreciate it. Anyway, this is gonna be 2 minutes and then I will be done. Yeah, let's just watch this real quick. Oh, it's the live execution, but we'll still watch it. This is fire. I'm surprised he didn't buy another one right here, actually. We did not institutional order flow entry drill. We retest this order block. Take profit at the rejection block. That was a good take profit. We take two more off at this wick here, or 3 more. And then 3 more at the equal highs. And we have a beautiful market maker buy model. The daily volume imbalance is the final target. Dude, this was really well executed. Yeah, bro, definitely watch all the videos. I'm just trying to I'm trying to make more all the time. I'm trying to hopefully, as I learn things, make more videos every single day that I learn something, so that way other people can, you know, learn stuff too. But yeah, dude, thanks for watching this with me. It's been chill. We're almost done with this, and yeah, this is beautiful. This is beautiful buy model though. Yeah, this is nice. It's only a matter of time. We're gonna catch trades exactly like this. We will.
Imagine
very
being
cool.
able to build any,
all right,
for any reason, in any style, at any.
All right, there we go. That concludes this live stream. I will see you in the next one. Peace out, and until next time.